Hello, trading is closed on July 14th, 2014, and I'm Jeffrey Tennant. I had no call for today. We did trade over this high, which is what I thought would happen Friday, but no call means no call, so I don't get any credit for that. There wasn't much happening with the mejt system today. Early on, it said ultimately lower prices would print, but the target in the color-coded gray was really too close to make the trade worth taking. Later on, it said this rally was a false one, that prices would retrace to this thick blue line, which they did, but once again, when the target is that close, it's hard to justify a trade based on the system alone. We have a failed target from a few weeks ago, a few days ago, of 1981.95. Be nice if it printed, but mejt likes to leave failed targets at trend extremes, at major changes in trend. It's hard to rely on that. Without any mejt call for tomorrow, we have to use other forms of technical analysis. In general, today's pattern was the opposite of Friday's. On Fridays, we sold off early and rallied all day long. Usually that leads to a follow-through of the rally. Today we rallied early and sold off all day long, and usually that leads to a follow-through of the drop. It's not particularly good for the bulls that after this rally we couldn't hold any of the gains, couldn't hold any of these highs, and if one ignores the meaningless last 5 minutes, we couldn't hold any of the lows. That's a pretty negative pattern, which will be invalidated if we promptly take out today's high, ideally by gapping over it. If you look at the daily chart, the upper white line has been our stop loss, interpreted loosely on a closing basis. It has not been violated as yet, so the marks indicators remain on a sell. If we look at the 30-minute chart, in blue, we had a possible diamond on stilts. The rule is that the first challenge of the left stilt tends to hold, but any re-challenge tends to fail big time. We now have the opposite pattern in red. Here's your stilt, here's your stilt, here's an obvious diamond. So we have an inverted diamond on stilts. Same rule. Here's the origin of the left stilt. The first challenge tends to hold. This is the first challenge. If we can break through here to the upside, it should rally big time. It would also, should that happen, and should we hold it, invalidate the marks daily sell signals. Usually when these signals fail, they fail big. So a rally from here would have very positive implications for the market. But let's not forget, here's the Fed announcement from June, and typically it has three waves. We had a short one down, a large one up. Typically there should be a larger move down. We don't have to stick our neck out too much for this. Best guess that I have is unless we gap over or promptly trade over today's high, we should trade lower tomorrow. And if we do break it and hold it, there should be a big rally. Until that happens, the odds are still favoring a drop. And if we drop enough to take out this level And this low in particular, it still could mark the end of the 5-year bull market. And that's today's call.